Okay, so without further ado, we're going to move on to our next session. This is on the theme of investment strategies and outlook by a Singapore-based global VC. So, ladies and gentlemen, please join me in welcoming to the stage Mr. Chua Kee Lock, Vertex Holdings CEO. 皆様、拍手でお迎えください。どうぞ。
Well, thank you very much for having me here today. Anyway, a brief introduction about who we are. Vertex is a global venture capital firm based out of Singapore with 7 network partnerships across the globe with about 100 over global professionals investing around the world, primarily in information technology and healthcare sector. Today manage over $7 billion US in asset under management, of which half of these are raised from global investors. Our structure is very unique. Vertex Holdings is an investment holding company under Temasek. As some of you are familiar, Temasek is a Singapore government investment company focusing on various sectors with about $300 billion US under management. Vertex Holdings is a subsidiary of that Temasek Holding. With Vertex Holdings, what is unique about us is that we have under us 7 separately managed, separately organized venture funds across the globe. Starting from the left, you can see Vertex China, then we follow by Vertex Israel, Vertex Southeast Asia, India, Vertex USA, and of course Vertex Japan, and a Vertex Healthcare, and last but not least, the Vertex Growth Fund. Those that we have indicated, the red dot on top of the box, those funds are currently also active in Japan. As I mentioned earlier, we are unique in the sense that we are a global firm, but with a local team in each of the locations, with the local members focusing on its respective market. So starting from the left, as you can see, Israel, there are 7 partners based out of Tel Aviv, focusing on opportunity in Israel. Further to the right, you can see 7 partners based out of China, 3 cities in China. And then follow to the right, you can see the US team based in Silicon Valley. And last but not least, to the right, you can see the healthcare team based in Boston and in San Francisco. To the bottom of that, you can see starting from the left is the Southeast Asia team focusing on early stage IT sector, a total of 7 cities around various locations. And of course, in the middle is our Vertex latest member, Vertex Venture Japan, which I will talk more about it later. And last but not least, of course, the Vertex Growth Fund based in Singapore with office in Korea and Japan. As you can see from this slide, we actually today cover both the early stage with our 6 funds and the growth stage with the Vertex Growth Fund. This is just a selection of portfolio companies that we have across the globe. Today, we have 23 current active unicorn around the globe that are out of the 300 over active portfolio. As I mentioned several times, we are primarily focused on information technology and healthcare sector. And with our unique structure of respective local team member, we are better geared to find the best opportunity in the sector and in the market. One of the reasons why many startup companies will approach us is because of our unique structure. Because of our unique structure, we are able better geared to help startup company to do business development and help startup company to do various marketing and community development. And of course, if the necessary, we'll also help the startups recruit the necessary talent and fundraise or form joint venture. This is just a selection of some of the exits that we have over the years. Of course, the list is much longer than this. Starting from the left, just an example of that is a very famous company in China, a biotech company that we invested and exited, makes about 60 times our money. And of course, moving to the right is CyberArk. It's an Israeli cybersecurity software company. Today is still listed in New York Exchange. Market cap, I believe, is about $20 billion today. But of course, we make about 23, 24 times our money. And of course, on the right, you can see Grab. Well, we were the very first investor of Grab based out of Southeast Asia. Today, the dominant player in Southeast Asia. And of course, we make almost 10 times our money out of our Grab investments. For Japan, our journey in Japan started almost like 2017. When our growth fund raised its first fund, we started inviting some Japanese investors to be our investors. And that led us to raising more money in 2019 in Master Fund 2 for more Japanese corporation and government organization. And then in 2022, with the support of JIC and many other Japanese investors, we further expanded our interaction with the Japan market. And this led us to a better understanding that the opportunity in Japan, and then with this, we together with finding the right Japanese partners in Japan, we launched our Vertex Venture Japan last year, did our first closing in December, and now in the process of doing a second or hopefully final closing soon. For Vertex Venture Japan, we are primarily focused on deep tech, digital transformation, and content or IP-related sector. And many people always ask me, why Japan? And we realized that one very important ingredient of a successful venture ecosystem is that the government needs to be active to catalyze the market. And this is something we recognize over the past 2 to 3 years. We are seeing increasing government support in terms of funding, in terms of encouragement, in terms of many deregulation. And we believe that this is a beginning of acceleration in Japan market. And of course, Japan by itself has many talented people, complemented by many global talent, and this will further strengthen its capability. And of course, for Vertex Venture Japan, we work very uniquely with many Japanese groups, including University of Tokyo, Ministry of Economy and Trade, who have been very supportive of what we're trying to do in Japan. And this will further help us to do more investment in Japan. And of course, with our global network, we're better geared to help our startup to grow beyond Japan market. Maybe a couple more slides. This is essentially talking about what I see the internal industrial outlook in terms of venture capital, startup, and investors. Of course, we are all familiar with the world have changed after April, with the US tariff, and with the world order have changed. This clearly have changed the investment landscape significantly. Now, of course, what we are also familiar with the China-US continued tension, and then this tension is likely to lead to a bifurcated of the economy. And this will create further complication in the venture world in terms of economy. An economy like Japan, not unique to anybody of us, many of us are experiencing higher inflation because of global supply chain dislocation. Without, although this is a, sort of a grooming picture, on the right-hand side, you can see we are still continuing to see technology innovation, especially in a market like China, artificial intelligence, and the consumer sector. And Japan are not very far behind. Beyond Japan, Japan are also working closely with ASEAN and many other countries, trying to extend some of this technology collaboration. And all of us are familiar, Europe recently, or many for the past 12, 18 months have approved increasing spending in the defense. We expect a lot of spillover effect for some of the technology which are likely to be a dual purpose applications. And this is something that we believe that will further create more opportunity in startups in the future. For startups or for VC or investors, the industrial outlooks are very different. Specifically for startups, with this global trade change, this location, startup company have to be conscious that you have to be able to operate capital efficiently. Gone are the days where you can raise a lot of money, burn a lot of money, hoping to create your product market fit. Today, investors expect you to create product market fit in the shortest possible time, prove that your product and technology or business is able to demonstrate profitability quicker. So therefore, as a startup, you need to be mindful investors have more expectation of a startup to achieve product market fit with less capital in the next foreseeable future. For venture capital firm, of course, with this global geopolitical situation, things are only getting complicated. Today, as a venture capital firm, even though we are uniquely, separately organized in each location, when we invest in a startup, we have to be mindful of the geopolitical risk. Meaning that if you cannot invest in a particular technology or company, knowingly that this technology or company could be somehow under sanction by other region or other market. So therefore, it's very important in any of the venture firm we investing, be it Japan or in many markets around the globe, factor that geopolitical variable into your calculations. And this is an important factor to be considered, which we do not need to consider many years ago. And today, this is an additional factor that you need to consider. Of course, what about investors of a venture fund? Investors of venture funds, unfortunately, are increasingly under stress because of less distribution. Many of you are aware, because of the IPO market being delayed, many venture funds are increasingly seeing their exit market being stretched out. So therefore, many investors of venture funds are increasingly refocusing and relooking at their own portfolio, figuring out how to rejig their portfolio. Therefore, if you are a venture capital fund, need to raise capital from venture investors, you will find increasingly harder, and in fact, the consideration is increasingly more complicated in the near future. For Vertex, because of our unique global network, each of our network funds are focusing on its own local network and local connection and local opportunity. Of course, we are still trying very hard to leverage on our global network to collaborate to help our startups to grow beyond their home market. However, because of these geopolitical complications, increasingly many of these conversation needs to be sharpened. We need to retarget our focus to make sure that we focus on the right growth sector and not to grow beyond what we are capable of doing. Now, for Japan, there are a couple more slides about what we see in Japan in terms of startup ecosystems. Of course, I mentioned this a couple of times. We see that government involvement initially for any strong ecosystems, startup ecosystem is critical. I mean, we don't have to look very far. You look at Korea. Korea has been very successful because of government intervention in the early days, about 15, 20 years ago. So is UK, so is France, so is China, so is Singapore, so is many other examples. So it's very good for us to see the Japanese government today are increasingly putting more effort and support into the system. Be it R&D fund, be it grant, be it trying to attract more talent to the market. We see this as an ingredient to create more, driving more innovations in Japan and in the startup. With more innovations, we expect many of these startups to drive towards commercialization. Now, one of the very important factors that we think Japan has, which many of the markets around Asia, except for China and India, or even Indonesia, may not have, is the fact that Japan has a very large market of 100 million population. Because of this 100 million population, many of the startups is able to better focus its initial commercialization in Japan. Now, of course, startup by its nature tends to be disruptive, tend to create things that naturally may fall into the gray area in some regulation. And I can see there's increasingly more Japanese government willingness to deregulate, and we will see more of this in the near future. And of course, in terms of investors, ultimately for us as a venture investor, it's about creating exit, creating return for investors, and by so doing is essentially require us to exit to either IPO or M&A market. And just globally, just for your information, most of the venture portfolio, 75% are exited to M&A, 25% is IPO. IPO market Japan is very vibrant, and I see Japanese government trying to do more to even make it even better. However, M&A market in Japan generally is weak, And I can see also that the Japanese government is trying to do a lot of things by changing the accounting rules, by changing the tax regulation, trying to encourage more M&A opportunity in Japan. Hopefully this will be done in the next 18 to 24 months, and we can see more M&A activity in Japan in the near future. Couple more slides. As a venture capital, whether be it Japan or be anywhere in the world, you are essentially a partner of the startups. Beyond investing as a capital, we also need to provide mentorship, support, connections, and helping the startup to better find the product market fit in the shortest possible time. Vertex, one of our unique capabilities is that because of our global network and global presence, we are better geared to help some of our startups to grow beyond its local and existing market. And this is something that we believe is important. By so doing in Japan, focusing on initial commercial success in Japan, if we are able to grow and help them to grow beyond Japan, this will scale our company to be the next few unicorns from Japan. The last slide, essentially, we believe that the Japan's startups, one of the ingredients it has is a unique funding environment and is single large market in Japan. However, one of the things that we discover, a lot of startups in Japan tends to only focus on Japan market and less likely to go beyond Japan. This is something we hope that more startups will not stay within just in Japan. They should recognize that although Japan is 100 million people population, there's 7 billion people outside Japan. It's equally important to grow your market beyond Japan while using your initial commercialization success in Japan, expand beyond Japan, and grow beyond Japan. And in so doing, you need to find other talent, other people which may not necessarily be Japanese, be it in Southeast Asia, be it in Korea, be it in any market in the world, stitch them together as part of a member of your team so that you can grow beyond Japan market. And of course, one of the very important factors to help you accelerate to grow beyond Japan is to finding investors, likely investors who have global presence beyond Japan, investors who have a global view outside Japan, help you to further expand your opportunity beyond Japan. With this, I will end my presentation. Thank you very much for the opportunity.